we've seen a relentlessly negative media sentiment. You pulled some really good quotes here, I think, that illustrate that. What are you seeing out there in the tone shift? And I'll just say anecdotally on the podcast I was listening to, I noticed maybe first week of August a notable chilling of the tone of guests and people in this space. And I forget when the MIT negativity paper came out, which I'll talk about as well. But it feels to me like this as maybe about a month old, that maybe starting about a month ago rather, the chilling began. What did you see?
First of all, it's worth noting we have said overall market conditions, some retrenchment is perfectly healthy, and in fact, we expect it to happen. We've seen some aspect of that in August. The market's relatively flat, but we've seen some kind of rotation out of a lot of momentum stocks. You're never going to win 12 out of 12 months of the year. You're never going to win every quarter. That's part of investing. You need to take some short-term losses if you want to have those long-term gains. So we think relatively some of the retrenchment in the market, that's healthy. Now, you mentioned the quote from the New York Times reporter. I'm just going to read it right here. He said, "I'm surprised by how much demand there is for GPT-5 is a bust / AI is hang a wall takes. Some of it is wishful thinking or motivated reasoning, but some of it feels like a deep yearning for equilibrium. People really don't want to live in a world that is constantly changing." And also, I just thought that was really astute right now. You look at the motivation. We own a website for what you'd write to get clicks. 100% all motivation is tilted towards AI is a total bubble. It's about to burst. There's nothing useful from here. And I do think that does go back to really an innate need in humans. As he said, there is something deep and fundamentally changing, and that's uncomfortable. It's uncomfortable for me in many levels. I'm sure it's uncomfortable for you. And this is kind of what we do as people. If someone makes a list of the top sports teams, it's not so that everyone can celebrate, so everyone can say why it's wrong or, nitpick on it. That's a lot of what we're looking at in the AI space right now. So I think, we have media negativity. I'll let you go in on the MIT study a little bit more. But what I will say is this past week, we had what I would call the Super Bowl of AI right now, which is NVIDIA's earnings. I thought there was some really spectacular information there, some acceleration about this platform we've been talking about with Blackwell, and it really presents an exciting future for what's ahead in AI. So again, negativity out there in the media. We'll do our best to provide a really objective look at what's happened the past couple weeks, but I'm seeing some things that are very encouraging from these earnings, even if stock prices aren't necessarily moving up in the short term.
Yeah, we certainly don't want to be Pollyanna-ish, and we need to keep a clear head in this environment. But when I see things like this, it feels to me a little bit to be like a case of sour grapes, right? Like people, we saw everything similar with cryptocurrencies, right? It's people don't want to believe that they've missed this trend, and that therefore it's easy to call it a bubble. And just further on some of the negativity, there was this MIT report that was published. It was called "The State of AI," which sounds really authoritative, and it had a conclusion that a lot of media outlets ran with. And the headline was 95% of generative AI pilots failed to produce meaningful results for the companies surveyed. That sounds like a really dire headline, but we're seeing very clear results that point in the other direction, right? Meta's ROIC has gone from 14% in 2022 to 18% to 20% to 2022 most recently. So 22% return on invested capital. So, and all of that while reducing headcount. So first of all, 95% of companies is not 95% of dollars in the space. We're very early here. We know that. But also, what would the headline have looked like in the late 90s or early 2000s if you were to look at web companies and their profitability, or app companies and their profitability? Yet, we now have Uber, and we've seen what's happened with the iPhone and Google and other tech companies. Like, we are so early in this trend. This felt to me like shooting an arrow and painting a bullseye around it, and it's way too premature to call this technology a failure, because 95% of companies that have maybe early adopted it haven't yet seen financial results. I also don't fully appreciate the methodology of this study, but this felt to me like people were looking for something. The media was looking for something to hang on to. The headline here was scary, but the actual reality we're seeing in company performance, at least at the public market level, is different.
Yeah, and I would say, I would bet just about most people listening probably saw some headline about that MIT study. Almost concurrently, Stanford released a study with the exact opposite conclusion. I bet no one saw that. 100 to 1 media coverage ratio, which again, you need to realize what the incentives of the people sharing a lot of this information is. And again, it is highly incentivized to be negative. So I won't belabor the MIT thing, but it definitely felt like a lightning rod for this current moment that we're in.